Yeah, hello friends. How are you doing? I hope you had a great weekend and you're doing very well. So yeah, welcome to today's lecture. So as always, grab your notebook and your pen and let us get started. First, we are getting to the end of the lecture in its totality, and now we are dealing with rather as we progress, we're dealing with more and more complex and more important topics. So yeah, let's get started. Today's lecture is on brokers. So, according to Webster Dictionary, a broker is someone who acts as an intermediary. So, it's simply a broker is an intermediary. Any in between two players in a transaction is what a broker is. So, a broker is a company or individual that provides traders access to a trading platform to buy and sell financial instruments like Forex, stocks, crypto, or indices. So think of a broker as a bridge that connects you, the trader, to the marketplace where currencies, stocks, or commodities are bought and sold. Without a broker, you can't execute trades or view live market prices. Understanding how brokers work and choosing the right one is foundational to your success. So we have types of brokers. There's many different types of them. So we're going to deal with the most popular classifications that we know of. So one, we have the daily index brokers or market makers. So dealing index or market maker brokers. So these ones, they create their own internal market, often take the opposite side of your trade, which means that when you sell, they are the ones buying. When you buy, they are the ones selling to you. So the pros of this kinds of broker is that they provide instant order execution because they already have the liquidity and they have low entry requirements because again they are the ones that create their own internal market. They have access to live price feed, and then they are the in this case, they are the ones buying and selling from you. Their brokerage job is to provide you with the price feed to the international markets, whether it's forex, stocks, commodities, crypto, or indices. So the cons is that there could be possible conflict of interest, and there could be a slightly wider spread. Sometimes it's lower, sometimes it's wider. But the why this is a con is because they have access to their their own liquidity, and they can just manipulate prices however they want. And conflict of interest because again, really, they can almost do what they want with their prices and manipulate it however they want. So we have non-deal index brokers. So these ones connect traders directly to liquidity providers, which are banks or institutions, and think of them as intermediaries because they may not necessarily have the money or the liquidity to be able to be a market maker broker. So what they do is they act as an intermediary and they link you to the larger pool of liquidity. So there are two types. We have the STP and the ECM brokers. The STP is called straight through processing. Now this one's the route orders directly to liquidity providers. What these ones do is that they don't sort of authenticate the transaction, they just route it. Once you place a buy, it just goes directly. Again, depending on the level of infrastructure and technology they have, that would determine the speed. Because in these brokerage businesses, in hedge funds and all of that, micro, milli, nanoseconds are very, 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 very important. But as retail traders, we don't really know that. That doesn't really impact us too much. Then we have the ECM brokers. These are the electronic communication network brokers. So what they do is they aggregate quotes from multiple liquidity sources for the best prices. So what they do is they take, because there's many, they can get their prices from many liquidity providers, from many institutions that provide liquidity. So they take the average and then they just, just like a mean of it, and then they just give the trader the average of those prices. So the pros of this is that they have transparent pricings and no deal index interference, which means is that you can almost be sure that they are giving you an average price because they also are trying to make a profit. So they always want to give you the best pricing for you to trade and for them to also make a profit. So the cons is that they usually require a higher deposit and variable spread. Yes, because again, think about they are giving you an average price, which means they are trying to give you the best possible price. So again, they want to extract as much liquidity, as much profit as it can from such trading. So how brokers really make money? So they primarily earn through spreads, commissions, and swaps. So spreads are the difference between the buying and selling price of an asset. So if you remember the lecture on bid and ask prices. The difference between a bid and a ask price is the spread. So the ask price is the price you buy, the bid is the price you sell. So that's how they make profit. So when you take when you take an execution, you are not going to buy at the exact market price. You're going to buy at the ask price, which is usually higher than the bid price. So that difference is the spread. So some also charge commissions. There are some that charge spreads and commissions, and there are brokers that give you zero spreads with some commissions. So a commission is a small fixed fee per trade. So these are common with ECM brokers. Again, remember they are the ones that give you an average pricing to trade, and they don't have their own liquidity. So they tend to give you the best pricing, and then they just charge a little commission for it. We also have swaps. So swaps are overnight interest charged or paid when a trader holds the trades overnight. So because of interest rates, very varying interest rates on currency pairs. So the holding a trade overnight usually incurs an interest depending on the difference between the interest rate between the two currencies. Sometimes it is positive interest, which means the trader actually makes money from interest, but mostly it is negative interest. So you pay that to the broker and they earn that. So for example, if Euro USD is 1.10000 as forward slash 1.1002, the spread is 2 pips, which is the broker's profit margin. So choosing the right broker. Now, before opening an account, evaluate the following. One is regulation. Ensure the broker is regulated by a reputable financial institution, which is very important. Before you choose any broker, you just want to go and check this. Are they regulated? Who are they regulated by? And you want to be sure that the regulation is authentic. It's not just on their site. So one is regulation. You want to ensure the broker is regulated by one of these financial institutions or more. They can be regulated by more. So one is the FCA, which is the Financial Conduct Authority for the UK. Another one is the CISEC, which is the Cyprus Securities and Exchange Commission for Cyprus. Another one is the ASIC, which is the Australian Securities and Investment Commission. Another one is the SEC or CFTC, which is the Securities and Exchange Commission, or Commodity, and CFTC is Commodity Futures Trading Commission for the United States. So regulation protects you from scams and ensures fair trading process. So as you can see, these regulations they are not regulations in every single country. So if your country is not a regulator of brokers, what you can do is ensure that at least the broker is regulated by the country in which they originate from or more. So another thing you want to check is the trading cost. You want to check the spreads. You want to compare the spreads between brokers. You want to check their commissions and their swap fees, because lower cost means higher profit potential, and it means your broker is not ripping you off. You also want to check the deposit and the withdrawal options. So good brokers support local payments, whatever your locality is. A broker who is intentional will support a local payment, both profit and withdrawal in your local currency. You also want to check if they have quick withdrawals and transparent policies. Also, you want to check if the platform is available on your workplace, because their brokers are not available on common workspaces. So the broker should be available on the major and preferred workspaces for you, or that is most preferred in your region or country. So the popular ones are MT4, MT5, CTrader, and TradingView. You also want to check their customer support if they are very responsive, and that's a very critical thing. Before you even deposit, you can chat customer support and ask them questions, see how they respond, the time they respond, and all of that. So also very important is check the reviews. A broker with an average review of like 4.5, 4.8 on Trustpilot or any other review platform is a very solid broker. And you want to check what kind of people, because there will always be complaints. There will always be mistakes. There's no perfection. There could be downtime. There was the Cloudflare downtime sometime, and it affected a lot of brokers and financial institutions, their sites, even X. It affected Twitter. So this may have been something that happened, maybe not even from the broker side, and a client was trying to do something, and eventually we say it's the broker's fault. So there will be issues, but you want to check out the issues and ensure that they are not recurring issues. So after we have the types of brokers, when you now select your brokers, there are usually different types of accounts that brokers provide, right? There are multiple different kinds of accounts. So some brokers can provide multiple different types of accounts even within the brokerage itself. So types of accounts. So when you open a brokerage, you can choose from several types. So we have the demo account, which is the practice account with virtual funds. So this is where you start as a beginner. You don't know what you're doing. You just open a demo account, $5,000, $10,000, $100,000. This is where you practice how you link a brokerage accounts with your trading platform, what lot size is, what spread is. This is how you experience all of those things. Okay, what is swap? Oh, you see the reality of trading here. This is where you test it out without actually putting anything on the line. This is where you test all your platform, place a limit order, place a buy order, buy stop, sell stop, take partials, enter multiple positions, stack your position. This is where you try everything to get used to your trading platform and to also practice your analysis. So we have a standard account. This is usually a regular account with spreads only. There usually is no commission, just standard spread. Floating spreads usually that goes up and goes down. Just again, they're trying to aggregate, because again the ECM brokers are the most popular brokers, so they're trying to give you an aggregate. So the spread will not always be the same at every point. Again, remember that during news and economic releases, the spread will widen. During low liquidity periods, the spread will widen as well. And so it's not fixed spread, but so it's called floating spread, and this is really good for intermediate traders. You're not yet advanced enough to just start paying commissions. You don't really even paying the spread. The spread fees are not really significant to you. You're just getting started. You just want to get a hang of what this is all about. So we have raw or ECN accounts. So this one's they offer tight spreads with commission. So in this case, you can have very, very, very low spreads, almost sometimes even up to zero. Some even give you zero spreads. This is better for experienced traders, because now you know what you're doing. Because now you don't want fluctuation in prices. You want to know the fees that you're paying per trade at every point in time. So, and this is what commissions guarantee. You know how much you're paying for this trade. If it's $5 per lot, $7 per lot, $10 per lot. Usually it's a maximum of 7 that I have seen. $10 per lot. I wouldn't know why a broker would charge that, but it's very possible. So we have the micro center account. So this one trades in very, very little volume. Remember, there is different lots. So there's the standard lot, there is the micro lot, there is the mini lot. There's even the nano lot. So this micro center can provide the nano lot. They provide lot sizes that are way smaller than the average. So this one is new, is good for traders with very low capital, and you want to practice the trading. You want to practice trading out, but you don't really want to put in too much capital. So this is very good. So we also have the Islamic and the swap free account. So under Islamic or Sharia law, it is forbidden to charge interest for it's forbidden to charge interest. Generally, I don't know the law extensively, but this is I'm sure if you are Islamic, you understand the requirement of Sharia law. So most brokers understand this, because you have clients from Islamic countries, the UAE, Pakistan. You have clients from countries that they would rather not participate if you are against the law of their religion. So this is why this is provided. So we call them Islamic accounts or Sharia accounts, and this is for predominantly for Muslim traders. Non-Muslim traders can also take advantage of this if they find it useful. So we have the process of opening a brokerage account. So this one is best described, with a video explanation. But just to go through it here. So one is, again, look at the process of choosing a regulated broker. Are they regulated? Have you checked the reviews, commission spreads, the fees? Have you checked their withdrawal? Do they have a local withdrawal and deposit method? So that's one. So number two is to register an account. You provide proof of address, you provide your ID, which is what they ask for, and also you open a demo account to test things out. It's very important to open a demo account, check it out, right? Then afterwards, you download the trading platform, MT4, MT5, C Trader, whichever, Mat Trader, and then you log in to that trading account with the details that were provided by your broker. And yeah, that's it. You get started. So common mistakes that beginners make, it's very important to state this now. So number one is you trade with unregulated brokers, and this can lead to scams or withdrawal issues. You don't want to do this. You want to trade with a broker that, again, while this may not be the best, but you want to trade broker everybody's talking about, and that is at least out there, and they are responding to people. Again, just check it out if they are regulated, which is why I added this to it, choosing the right broker. So just check that out and be sure that they're a regulated broker. Another one is ignoring spreads or commission cost. Please don't. Ensure that the cost of your spreads or commission are not exorbitant. There are good brokers that will offer less. So please do your due diligence and confirm. Another one is trading live without practicing on demo. Except you're a pro and you're just hopping a brokerage account, it's very unadvisable to just start trading without a demo. Not because you don't have money to lose or because you don't know what you're doing, but usually because you want to really test the brokerage. I've had some years of experience in trading now, and if you offer me a new broker, I will open a demo account first. I will open a demo. I open as all the demo accounts possible. Remember, there are types of account. I will open a demo account on each type of the account to test out the brokerage platform just to see before I decide on which one suits me best and I deposit my money. Another thing is over leveraging, risking too much capital per trade. So this error is not a brokerage error, it is just a general error that traders make, and I'm beginning to just chip it in here so you understand that it is not advisable to risk too much. If you have $1,000 and you risk $500 on a trade, that is not right. That is out of this world. You risk little, you grow little, compound interests will do the job eventually. So let me just quickly touch on trading platforms and software. So once you've selected your broker, the next step is to choosing the trading platform, which is your digital workspace. This is where you analyze the charts, place trades, and monitor your performance. So a good platform should feel like a control center, something intuitive, reliable, and equipped with the right analytical tools. So a trading platform is a software, a desktop or a mobile or web-based platform that allows a trader to one, view live market prices, execute buy or sell orders, access technical tools and charting tools. So also monitor trading performances. Some are used to automate strategies through trading bots or expert advisors, popularly known as EAs. That's what a trading platform is. You use it to you can have multiple trading platforms. You can use one to just view the market exclusively, which is what trading view is usually for. You can use one to execute. You can also execute on trading view, but execution, you see a lot of traders using MT4, MT5, C Trader, and all these platforms. They are cross-functional, cross-device functional. It's on mobile, it's on web, it's on PC, it's everywhere. So we have common trading platforms. So we have MT4, which is actually the most popular and beginner friendly platform for trading Forex. It offers charting tools, indicators, and automated EAs. It's supported by most brokers worldwide, and it's ideal for manual trading and basic strategy. So we also have MT5, which is the upgraded version of MT4. This is actually faster and has more features. It supports stocks, indices, and commodity trading, and not just Forex. Includes an economic calendar, indicators, and more order types. Then we have CTrader. CTrader is a modern platform with transparent ECN pricing and advanced order execution. It's actually very advanced. There's so much you can do on CTrader. You can take partial profit. You can set all these things automatically. So CTrader is good for scalpers and traders who value real-time depth of market data. So CTrader is a very, very advanced. Think of it as big bro to MT4 and MT5. So we also have TradingView, which is a web-based and social platform for technical analysis. It's popular among traders because of its clean chart and community ideas. You can chat on TradingView, you can see people's ideas on TradingView, and some brokers are now beginning to integrate TradingView for order execution. So it's now becoming a very robust platform to do everything, and it's doing it very well. So we also have analytical and supportive software tools. So beyond trading platforms, traders often use external tools for better decision making. One is economic calendar, because it's a tool, you must have it. You must have it in your tool basket. So again, remember the lecture on economic calendar and fundamental analysis and news trading. So this one is used to track news events. Again, we have Forex Factory, we have investing.com, we have Baby Pips. We have position sizing tools. So how do you know how much lot size to use? How do you know how to risk? How much to risk? All of these things, how much you are losing per trade. We have position sizing tools. We have Baby Pips. We have Forex, my FX book, and many others. We have trade journals. So this one is used for tracking your performance. It is very, very important to track your trading, so you'll be able to understand where you're making mistake, what you're doing right. As you're measuring things, you can know what is wrong, what is right. You can get feedback. The feedback is very important in trading, because again, it's just like anything in life. You're not just perfect the first month or the first year or the first 10 years. You have to keep learning. So this is what trade journals are for. Handwritten journals are also very essential. They are very useful, but again, we have a variety of human beings on earth today, so really not everybody will be able to do everything, but these are all the options. Find whichever one works best for you, that gives you success, and stick with it. So we have Notion, we have TradeZilla, you can use spreadsheets, and then there's there's so many others. As you research, you keep finding them. We have backtesting tools, and these ones are used to test your strategy before live trading, to test previous charts, what has happened before in the past, because most of trading and investing is just inferential analysis. You want to use some details from data you have from the past to predict the future, albeit there's no guarantee, but this is how we kind of come to a conclusion of what the future might be like in trading. So we have backtesting tools like TradingView Premium, we have TradeZilla, we have FX Replay, and really there's so many others as well in this regard. Just once you search for it, trading backtesting tools, you will see a variety of options, and you just blow yourself out with it. So yeah, that brings us to the end of this lecture on trading software and platforms, which includes, the analytical softwares, the trading softwares, the supportive tools, brokers, economic calendars, and many more. And again, I just want you to specifically remember the process of choosing the right broker. It's important, it's very important, and ensure that they're licensed and regulated. Ensure that they support local currency, their customer care is good. Check the reviews on Trade Pilot, and just the that general thing you do when you want to buy a new product, to just ensure that everything works well. So again, this brings us to the end of another lecture. We are getting really close to the end of this entire mentorship, and I hope you're getting a lot of value from this and you're enjoying it as much as I am. And if you're not, please send it to someone whom you think would benefit from this. And you don't just share it as much as you can and give to people that you think would benefit from this. Again, I would love your questions, I would love your ideas, I would love your insights, and until the next time, I wish you all peace and good luck.